Hello students, welcome back to Accounting 2402, Principles of Managerial Accounting. This is Dr. Mercado speaking. I hope all of you are doing wonderful, are having a great week, and we are getting ready to continue with Chapter 20, Cost, Volume, Profit Analysis. Now in this lecture, we are going to be covering Exercise 20-11. This is a brand new exercise that we're going to be covering. Please make sure that we read the chapter before we attempt any of your homework assignments. And if you have any questions or concerns, you reach out to me, okay? Just make sure that you do include an image of your problem that you're having issues with, because every student does have different problems. That way I know what problem you have. And I can work off of your numbers. And then if you can also include your detailed calculations of what you're doing so I can review and provide guidance as necessary, okay? I do want to see what you're doing. I do want to see you give it a try, not just tell me, well, miss, I'm lost, okay? There must be something you understand. There must be something that, it's throwing you off. Just show me what you're doing, and then I'll take it from there. I'll analyze your information, and I'll get back with you, okay? So remember, I am here to help you. Just because it's an online class does not mean that you are alone on this. Make sure that, I try to provide as much resources as possible, the textbook, PowerPoints, my lectures, Cengage videos, whatever I think will help. But we do need to put some effort into the class, invest some time to try to understand the material and the content, okay? So let's get ready to go to our exercise 2011. Exercise 2011 deals with break-even sales and sales to realize operating income. So it says, for the current year ended March the 31st, Cost Growth Company expects fixed costs of $27,600,000, a unit variable cost of $805, and a unit selling price of $1,150. We are being asked to compute the anticipated break-even sales in units and compute the sales units required to realize operating income of $5,175,000. Okay, so we're being asked two things. Okay, now the first thing that they're asking us is to compute the anticipated break-even sales in units. How many units do we have to sell to break even? Remember, break even is when our cost equal our revenue. Okay, where we don't generate any income, we just break even. At that point, our cost equals our revenue. There's no money being made. Okay, this is a number that will get us to that point where we are going to begin to generate some income. After this break-even point, then we're going to start making some money, kind of a thing. Okay, so how are we going to figure this out? Well, in your textbook, we have the break-even sales units formula, which is basically your fixed cost over your units contribution margin. Okay, now the question becomes, what is your units contribution margin? Coming straight out of your ebook, the definition for unit contribution margin, it says that it's the dollars available from each unit of sales to cover fixed costs and provide operating profits. Now, how do we calculate unit contribution margin, class? Well, our unit contribution margin is equal to our sales price per unit minus our variable cost per unit. Now, we need those figures to be able to calculate our unit contribution margin. And guess what? This problem gives them to us. Okay, our sales price per unit, it says here, okay, our sales price per unit is going to be $1,150. Okay, our variable price per unit, variable cost, is $805. Okay, so we've got both components available being provided in the problem. Okay, so we've got this. We're going to solve this. It's going to be a piece of cake. Okay, so the first thing we have is our fixed cost. According to the problem, my fixed cost is $27,600,000. We're going to divide over our contribution margin, units contribution margin. Okay, our units contribution margin is going to be our sales price per unit, which is $1,150, minus our variable cost per unit, which is $805. Okay, and let's see what that gives us. Okay, so let me get my calculator. So $1,150,000 minus $805, that's $345. The bottom part is $345. So it's going to be $27,600,000 divided by 345. That's going to give me 80,000 units. Okay, 80,000 units. So we need to sell 80,000 units to break even. Okay, that's my break even sales in units. At 80,000 units, I have broken even. My expenses equals my revenues. At that point, from my 80,000 one unit, I'm going to start generating income because at my 80,000 unit, I break even. At that point, I'm covering all of my costs, so I'm good to go. Okay, 80,000 units is my break even sales in units. Okay, that is requirement A. Now, requirement B says to compute the sales units required to realize operating income of 5,175,000. So here they're putting you, okay, if I want to generate operating income of 5,175,000, and this happens a lot. Management just come up with these numbers. Or, what if, what if this were to happen? Or what if that were to happen? Give me numbers that tie to these what if statements. Okay, so what if I wanted my operating income to be 5,175,000? How many sales in units are required to realize that operating income? Well, in order for us to be able to figure that out, we're going to have our sales units. To be able to calculate our sales units required to be able to generate that operating income of 5,175,000, I'm going to get my fixed cost plus my target profit, which my target profit is 5,175,000 over the unit's contribution margin. Okay, so let's see what that will give us. Okay, the first thing we have is, do we have our fixed cost? Yes, we do. According to the problem, my fixed cost is 27,600,000. Okay, I'm going to add my target profit. According to the problem and according to management, their target profit is 5,175,000. I'm going to divide that over my units contribution margin. Okay, your units contribution margin is your selling price of 1,150 minus the 805, which is your variable cost per unit. Okay, so now let's get our wonderful calculators out and let's see what we get. So for the top component, 27,600,000 plus 5,175,000. That will give me 32,775,000. Okay, 32,775,000. Okay, and I'm going to divide that by, that's 1,150 minus 805. We're going to divide by 345, and let's see what that gives us. Okay, so I've got 32,775,000, 1, 2, 3, and I'm going to divide by 345. Okay, that gives me 95,000 units. Okay, 95,000 units. So if we want to have operating income of 5,175,000, how many units do I have to sell? You would have to sell 95,000 units to generate that 5,175,000 of income that management wants. Okay, so at 80,000 units, we break even. Anything above 80,000 units, that's money in our pocket. Okay, so in that case, if we want to generate 5,175,000, we would need to sell 95,000 units. Okay, so that's very straightforward. It's just knowing the formula that you have to apply and then plugging in the figures. Okay, and then that will give you the amount of your break-even sales units or the sales units required to be able to generate the realized operating income stated in the problem. Okay, so it's just a matter of understanding. Make sure that whenever you're solving a problem, you read it carefully, and then you go back to your ebook and you try to locate the formula that fits what the problem is asking you to do. Okay, and then follow from there. I'm not asking you to memorize all of these formulas. I'm asking you to learn to identify the formula that needs to be applied to the specific requirements. Okay, if you're able to locate and isolate, okay, this is the formula that I need to use, then that's all you need. Okay, there is no need to overcrowd your brain with information. Okay, just, okay, well, I know that this is what they're asking, this is the formula that applies, and I'm going to apply the formula. Okay, so just make sure that you read the problem carefully, that you do your mathematical calculations correct, and you shouldn't have any issues. This is a very straightforward problem. I really enjoy it because it helps us understand, okay, how many, to calculate the break even in sales, how many units do I have to sell to break even, and then how many units do I have to sell to generate a specific operating income. Okay, so that way we're able to say, okay, well, management, if you want to generate 5 million, this is what we have to do. If you want to generate 6 million of income, this is how many we want to sell. If you want to generate 3 million of income, this is what we can sell. So it's great for all those if statements or requirements that sometimes management just have ideas and they want to see what these numbers look like. Okay, so that is basically it for exercise 2011. Make sure that you pace yourself as you work these assignments or these problems. That way you don't stress yourself by leaving everything for Sunday submission. Okay, make sure that you try to work on them during the week. That way if you have questions or concerns, you can get with me during the week. Okay, so that is basically it for exercise 2011. Stay safe, and until next time, thank you.